Are you wondering what's ahead for property in 2022? Maybe you'd like to know what other Australian property investors plan to do. Well, that's exactly what we're going to discuss in today's show as we unpack the results of this year's Property Investment Sentiment Survey. You're going to hear what just over 1,700 Australians feel about our current real estate markets, what they plan to do. You're going to hear about how COVID has affected their property plans and how, if at all, they've changed their strategy. You see, they took part in this year's Property Investor Sentiment Survey run by my Property Update newsletter in conjunction with Yahoo Finance. And to discuss the results of this year's survey, I'm joined by Brett Warren, National Director of Metropole Property Strategists. Now, we've been running this survey since 2011. That's over a decade, so it offers a vibrant insight into how property consumer trends and sentiments, how they've changed over that time. And as usual, I'm going to be sharing my mindset message with you, because if you can change your way of thinking, it could change your life. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
While I normally share my mindset message at the end of the show, today I thought I'd swap things around and do it at the beginning of today's show before I discuss this year's Property Investment Sentiment Survey with Brett Warren. It'll be fascinating to understand what's going on in the head of successful investors. And clearly, over the next year or two in property, there's going to be winners and losers. And that's what I want to talk to you about in my mindset message, the big difference between winners and losers. Over the years, I've had the privilege of working with thousands of property investors, business people and entrepreneurs, and I've also met some not so successful investors. And in general, I found that people fall into one of two groups, the ones that make excuses and the ones that don't. And the ones that make excuses, they don't start out life that way. No one's born talented at making excuses, but over the years they've learned to get out of things. They've learned to blame the economy or their parents or their teachers or the government or the banks or the system. They blame pretty much anything that they can deflect blame on. This gives them the excuse they need. And then there are the people who don't make excuses, or rather won't. Look, we all got our difficulties at times, we've got our challenges, and some days we feel like making excuses. But winners stop themselves. They don't make excuses. They get on with the job. Interestingly, we all have similar capabilities. We've got the similar capabilities to get things done or not, to do things or to make excuses. So when you get up in the morning, you get to choose which route you take. Now, I recently read an insightful quote. The difference between successful people and unsuccessful people is that smart people hate doing what unsuccessful people hate doing, but successful people do it anyway. Successful people hate doing what unsuccessful people dislike, but they do it anyway. You've heard me say it before, do the hard things now and you're going to have an easy life later. Do the easy things now and you'll have a hard life later. So as you go through this journey that we call life, you'll have a chance to do things or back out. You have the choice. Well, it's been years since we had a similar podcast when Brett Warren and I discussed the results of what was then last year's Property Investment Sentiment Survey, and what a year it's been in our property markets. So once again today, I'm going to have a chat with Brett Warren, National Director of Metropole Property Strategists, about what 1,700, actually a few more than that, respondents think's going to happen to property and what their plans are. And it'll be interesting for you to find out how you fit in with this large group of already property investors. So welcome, Brett.
Hi, Michael. Good to be with you.
Well, Brett, while most respondents to last year's survey were very positive about the outlook for property markets in 2021, when we asked them that a year ago, I really don't think any of them would have thought property values would have increased by 20% or even more in most locations around Australia.
No, and look, many of the commentators obviously got that wrong as well. So I think it's a really good lesson for everyone that really no one knows what happens next. And, we have to, I guess, take the short term out of the equation and maybe focus a little bit more longer term and smooth some of those ups and downs out, Michael.
Good way of thinking about property, but that's what we've always said, isn't it?
Absolutely.
Well, let's get into this year's one as well. And it's Australia's longest running and largest survey of Australian property investors. And understanding their sentiment, what they're planning to do, how the world's affected them, gives us some great insights into property consumer trends. Because in the short term, really consumer confidence and what people plan to do does have a big impact, doesn't it?
Yeah, so before we get into the nitty-gritty of responses, Michael, what are some of the big trends you found this year?
Well, while we all seem to be in the same ocean, clearly we're not in the same boat. While some Australians have lost their job, others are working shorter hours, and unfortunately some have suffered significantly financially, many Aussies are in at least as good a financial situation or better compared to when the pandemic began. Sure, 2021 is a year many of us are going to want to forget, but it actually changed people's lives, as we found out from their answers. Many are working from home, many are making different plans. But the good thing out of the survey was that for homeowners and property investors, for many of them, it'll be the year that their properties have gone up in value 20%. In some cases, they've earned more from the ownership of good residential real estate, Brett, than they have from their jobs.
Yeah, as you said, I mean, no one could have predicted that. It's been quite a sharp turnaround in a period of 12 months is quite exceptional.
Isn't it? I guess one of the other lessons I learned is that investors are more cautious this year. When we unpacked the figures, a surprising result was that while only 12.4% of the respondents said their household finance had worsened, as I said, most people were either as well off or even better off. Most households noticed no real change. Unfortunately, only about 55.2% believe now is a good time to invest in property. However, 24.7%, over just about a quarter, plan to buy a new home. That's up a little bit from last year. Look, I guess it's no surprise because COVID made us realise our homes are more than just a place to live, aren't they?
Yeah, look, and there's some of the trends that we have to learn about moving forward as well. Things have changed, the way people are going to want to live in the areas and locations. So there's a bit of a reset, I guess, Michael.
Sure. So let's look into some more of the detail. Brett, who were the people who took part in this year's survey?
Yeah, look, there was a wide range of Australians. I know there was about 1,000, just over 1,700, ordinary mums and dads that responded. The fact they had already subscribed to Property Update or Yahoo Finance meant they were, a captive audience of people already interested in property. And when asked for their combined family income, 4% earned less than $50,000, while 34% earned more than $200,000. But the bulk earned a combined family income of between about $100,000 and $200,000. So 83% owned at least one investment property, but a wide spectrum of investors partook in the survey. 16.9% owned no investment properties, which was interesting. 22% owned one investment property. 18.8% owned two investment properties. 13.2% owned three investment properties or more. And then it went all the way up to 4.8%, which owned 10 or more properties, which is quite a large amount.
Isn't it? So when you look at the general population, we know that there are just over 2.5 million property investors in Australia, and only 20,000 or so own six or more investment properties. In other words, less than 1% of the Australian investor population own six or more properties, yet our survey had close to 5% owning 10 or more properties. So as you said at the beginning, it already is a little bit skewed to people who are established investors and probably a bit more financially savvy. I also found that they were realistic about what was going to happen ahead. They didn't expect to have another year of booming markets.
Yeah, particularly with what's come. I mean, the type of growth is sustainable. And I know, a third of the respondents believed Australian property values would only increase around 5 to 10% in 2022, and that's probably in line with a lot of commentators.
Yeah.
23.6% forecast a smaller increase in property values, maybe 0 to 5% in 2022. 16.4% believe values would remain fairly steady next year. 14.1% believe property values will increase more than 10% next year. That would be interesting.
That would be nice, wouldn't it?
Absolutely. And look, Michael, if the average is 5 to 10%, some areas will probably do 14 or 15%. And we had 4.5% think property values will actually decrease between 0 and 5%. 2.7% saw bigger falls coming between 5 and 10, and 2.8 suggested it may be more than 10% in property values ahead.
So about 10% of people thought property values would fall, 90% thought they'd remain steady or rise, but no one was expecting a great boom moving forward. And this was before the APRA interventions. So I guess they saw realistically that the sort of rates of growth we had so far this year were unsustainable. Now, we asked a couple of personal questions at the beginning, and we asked them, are they rent investors? And 17.4% were. In other words, they rented their homes but owned an investment property, while others thought it'd be a good idea to get into rent investing, to get into the property markets. But we asked a couple of COVID-specific questions, Brett. We asked them, are you considering moving to a different location? And I was impressed with the response.
Yeah, look, 82% they were not considering. That's been a big media buzz, isn't it? Everyone's going to be moving and changing locations and heading to the seaside or the tree side. And, 82.2% said they wouldn't. 6% considered moving to Queensland, and being from Brisbane, that's understandable. And 5% thought regional Australia would be better off, like we said, for lifestyle. So that's quite different from what we've been reading in the media, isn't it?
Well, I think the media was hyping up the idea that we got to get out of these places. And even though some people, I guess, were considering doing that, if they haven't done it already, it's not that likely they're going to do it now that life's getting more back to normal again. It is a big shift to pull up your family and move elsewhere. Now that life is as more normal, as I said, maybe that won't happen as much. But a large percentage were actually planning not to move elsewhere, but to buy a new home.
Yeah, look, that's probably understandable. We've got those, I think you've spoken before, Michael, about the cycle of upgraders and people upgrading from first home buyers to the rest. And even the empty nesters, the baby boomers upgrading in terms of, selling the big family home and upgrading into something smaller. So that's up from last year. Nearly 25% plan to buy a new home in 2022. And that's up from 20% over around the last 4 years.
Sure. So, again, that sort of makes sense, doesn't it? But when we asked them, is it a good time to invest in property, our respondents said much the same as what other surveys are doing. Westpac ANZ asked their customers similar questions. And in general, people didn't think it was as good a time to invest as last year. Now, that doesn't mean you shouldn't invest. What they're saying, understandably, is, hey, we've already had a lot of growth, so they're wondering a bit about what's going on. So respondents to this year's survey were less confident, 55.2%. Just over half thought it was a good time to invest this year, when 74% thought it was a good time to invest last year. And you know what, Brett? While the average Australian, when we asked this question in October last year, thought it wasn't a good time, the savvy listeners to this podcast and subscribers to Property Update, they got it right last year, didn't they? Yeah, they were able to block out the noise and look further ahead, and they've been handsomely rewarded, Michael. Well, when we asked them where they were going to invest, I think you wouldn't be surprised with the answers.
No. Again, the three big capitals play a part, and Brisbane's leading the way with about 47%, which is understandable. We've seen a huge amount of growth in Brisbane, huge amount of population growth. It's really led the nation. That's closely followed Sydney on 29%, Melbourne on 27.7%.
Now, these figures don't add up to 100% because people were able to answer more than one place, but not surprisingly, the big three capitals were the place people wanted to invest. But about a quarter of people are also considering regional Australia, and a smaller percentage the Sunshine Coast, Gold Coast. And even Perth, people thought Perth was the right place. It hasn't done well this year. It actually had a little bit of a start and then it's fallen backwards again.
Yeah, again, you can probably compare that to the iron ore prices and the mining resources and things like that. It's probably been a similar kind of pattern, I guess. And that's the problem when you're investing in those kind of volatile areas. But yeah, it's interesting to follow.
Well, we asked people, how has COVID, how has the pandemic changed your attitudes, changed your approach to investing? And not surprisingly, the answers were similar to last year.
Yeah, again, probably the more educated people that are answering the survey, Michael, aren't they? So they're probably a bit more understanding that there will be these bumps in the road. And 64.7%, nearly over 2/3, said no. It's not going to change things for them, and they've obviously gone through that process. 18.2% said yes, they are more cautious in that kind of time with what's happening at the moment. 9.7% that said they're worried about the future of property investing, and I guess 7.4% weren't really sure about what was going to happen next.
Sure. So the majority of people said, no, I'm taking a long-term view. Let's keep going. But when we asked them, has it affected their immediate plans in the next 12 months, 17.4% this year, 20% last year, were putting a pause on their plans. They're waiting to see what's happening, how the situation's going. Is the world becoming clearer? Having said that, the majority of respondents decided, no, they're not going to change their plans at all. And that's what we encourage our clients to do, Brett, not pay attention to, well, we talk about short-term news. This is, in the context of things, still short-term. It'll be a year or two. It will change some things moving forward. But when we look back in 10, 20, 30 years' time, just like when I look back at the global financial crisis or the recession of the 80s, the recession of the 90s, they were difficult times to live through, Brett. But now, in general, they haven't made a lot of difference to the way I invest or the success of my portfolio.
No, I probably don't remember as many of those as you do, Michael, but it's the same for myself.
You remember last weekend, do you?
That's right, yeah.
Okay. So interestingly, Brett, then we asked them, had they taken a mortgage repayment holiday from the lender? Remember all the news last year about the mortgage repayment holidays, Brett?
Yeah, it was. It was major headlines. And to see only 6.8% requesting a mortgage holiday, that's quite remarkable, isn't it, during a pandemic that was going to take over the world?
Sure. But we then also asked them, well, did your tenants request a rental reduction? I know mine did, my commercial tenants did, my residential tenants did, and I had to help them out. But what did our respondents say, Brett?
Yeah, so look, really interesting that no one requested a rental reduction or a holiday because of the COVID-19. Their tenants, 80% of their tenants did not request, which is another interesting statistic, which means 20% did, and that's probably par for the course during that period of time.
What about work? What about how they lived? We asked those sort of questions as well. And when we asked how the fallout from the pandemic changed their work situation, almost a quarter of the respondents found their work situation had become more flexible. I'm actually surprised. I would have thought it'd be more than a quarter, Brett. But I guess there are people in certain industries who couldn't work from home. The builders can't, the tradespeople can't, the manufacturers can't. And 16.5% said their work situation had become more flexible and now mainly working from home. I guess this also reflects when we're moving forward, when we're thinking about investing where the knowledge-based economy is, where people were able to keep their jobs, where people were able to actually even earn more during the pandemic. And they were the people who could work from home, who could work from anywhere, could work from their laptop.
I think that's an important lesson too, Michael. I mean, there was a lot of hype about people, the way people are moving away from the cities and the capitals because of that. 57% nearly of people, their work situation didn't change. So that's a majority of people. 23%, did change. There's more flexibility in working from home and things like that. And that technology and the meetings and the Zooms all brought that forward. But again, we were led to believe that the majority of people are going to be moving to the regions and working from home, and there's no need for a capital city anymore. But clearly, the majority hasn't done that. And I think it's really important as well to stick with the majority with those numbers.
Well, in fact, 1.4% said they moved house to allow for a better work from home situation, a very, very small percentage. And as I said earlier on, only 12.4% found their household finance had worsened, and almost a third found their household finances had improved. And that's not unusual. In fact, the Australian Bureau of Statistics have shown that more Aussies joined the Millionaire Club as the household wealth reached record levels over the last 12 months. Yeah, the facts proved that household wealth, net household wealth, in other words, net meaning your debts subtracted from your assets. So even though people have taken on more debt, their net wealth rose by a record $735 billion or 5.8% in the June quarter this year. So despite all the challenges that COVID has threatened us with, thrown our way, wealth for the average Australian was up 19.7% over the year. That's the strongest gain in 11 years. Now, we do not want to make light of those people who've had health problems, because I know some have. And definitely I feel sorry for. I've seen it. We've seen it amongst people we know, Brett, amongst some clients and amongst colleagues where their businesses have gone bust because no fault of their own. So we're not belittling that. But having said that, despite that, Australian households have never been wealthier. And the real reason for that is, well, a combination of two things, really. The rising house prices and superannuation balances. So people's financial assets went up considerably, significantly more than their debts did. But another interesting report, Brett, recently from Credit Suisse was that we're going to have 1.8 million Aussies considered millionaires today, but that number is going to grow to 3.1 million by 2025. So we're going to have more than 1.3 million new Aussie millionaires in the next 4 years.
That's incredible, isn't it? So it's almost going to double during that time. It's quite amazing. So.
And again, it's those who own assets. You can't become a millionaire through saving. Maybe you can if you get Bitcoin right and speculate, but boy, I wouldn't be counting on that. On the other hand, if you own an asset class of shares in the good companies of the world, or our preferred strategy of investing in residential or even commercial real estate, that's a way to become a millionaire, isn't it?
Yeah, it certainly is. There's a couple more specific questions here, Michael, and I guess some really interesting trends here that probably contradict what we see in the media. The first one was, are you considering moving to live in a different location because of COVID? And that was big in the headlines, wasn't it?
Yes, it was. But 82.6% said no, they weren't going to. But those who chose to move, those who were thinking of moving, where were they going to move, Brett?
Well, again, Queensland. They were looking to move to Queensland, so and they have been in their drives. I sit next to our property manager, and I think every second or third application at the moment is up from down south.
That's really interesting. I didn't realise that, but that's the reason why vacancy rates are low, why rentals are going up, and others are snapping up properties in Queensland. Queensland's had the strongest growth it's had in over a couple of decades at the moment, and more to come.
Yeah, and look, that's a very small part, isn't it? Just over 6% of those respondents. And interestingly, it was only 5% who were looking to move to the region. So, again, far lower than what was predicted and thought.
Well, I guess the jobs aren't there. If people are going to move, part of it is lifestyle, but you've got to be able to afford the lifestyle. You've got to be able to give your kids the opportunities. You've got to be able to, even though the houses will cost less there, still be able to enjoy your life. And so regional areas, I don't think, are going to offer the same opportunities as the big smoke. When asked why considering moving, those who were considering moving were doing it for lifestyle, and that's not unusual. And a really small percentage, 6% of them, saw that, they can actually work from home. They can work from wherever they want to. Now, Brett, I've actually only been into the office a couple of half days this whole year. And it's not because of COVID, even though COVID was clearly a restriction. I've just realised, as a lot of our staff have, that you actually can do certain duties. And in my case, since most of it's spent in front of the computer writing or speaking to the media, I can do it wherever I like. So I'm going to be going on more long cruises again, mate, and working from a nice suite on a cruise ship.
That sounds good to me. You might have to hide in your suitcase or something, Michael.
Well, we already gave a hint at what property investors were thinking about when you asked me initially what some of the big trends were, but they were optimistic about our property markets for next year.
Yeah, that's interesting. And look, I don't know if that's because most investors are probably a bit optimistic, Michael, so maybe the numbers are skewed. But yeah, 68% of respondents, believe property values will rise in the next year. Last year, only 45% of respondents thought that property values would rise in 2021, while it was 61% the year before over the coming years. So that's probably going back up again, given what's happened in the last 12 months.
So, Brett, now that people are more optimistic, even though they were realistic, as we said before, about how high they expected property values to go, so they're optimistic in the long term and have long-term plans, what are their immediate plans in the next 12 months?
Yeah, look, I guess the majority are not changing their plans at the moment. 60%, 60.6% are not changing their plans. 17.4% are going to pause until they understand the situation. Obviously, there's a lot of talk of interest rates, and prior to APRA, there was APRA things happening as well. So they probably want to see how the dust settles and see how the year finishes off. 12.8% are still really interested in getting into the market sooner, and perhaps they want to get in before they miss this kind of wave. And 9% were unsure in fourth position there.
So what sort of properties were they planning to buy when we asked them the question, what is it that you're wanting?
Well, yeah, look, clearly off the plan properties are out of favour. Respondents are really keen to buy established properties. 38.8% are wanting to buy those types of established properties. And adding to that, probably some more savvy investors at 29.4 are looking to buy a property with add value potential. Probably not a bad strategy at the moment, Michael, with a renovation or development. I think once this cycle finishes, there'll probably be 3, 4 or 5 years of probably flat growth. So rather than relying on the market to do the heavy lifting, perhaps they want to look at adding some value themselves.
Again, we're speaking to an educated audience, and so only 8% were interested in buying a new property. Now, if you went out into the general public, Brett, I think they'd say, oh, look, I want to buy one of those new apartments because I get the depreciation allowance. I want to buy a house in the outer suburbs, one of those new house and land packages because of the large block of land.
Yeah, definitely. Obviously, there's some more COVID-related figures there. Obviously, the types of apartments are going to change that are in demand. The studio apartments and the one-bedders, there's more need for outdoor space and things like that as well. But clearly, apartments aren't on the radar at the moment, and probably those smaller type properties will remain low for a while.
Now, this question was asked to the respondents in October, at the beginning of October. We asked, do you think now's a good time to fix interest rates? Since then, APRA has gotten in, inflation has crept up, and the media is full of stories about interest rates rising. If you watch my regular Property Inside videos with Andrew Wilson, you'll know he's got a very strong view that no, the media is wrong again, and that interest rates aren't going to rise till late 2023-24. But 62.6% of the respondents thought it was a good time to lock in interest rates. That's up from 47% last year. But I have locked in a portion of my interest rates, not because I'm trying to time the market, but I believe locking in interest rates is just one of the strategies savvy investors can use in just ensuring their cash flow is manageable.
Yeah, I think rather than trying to time it, I guess help understand your situation and be comfortable. If you're in this situation to do so, then it might make sense as well.
But when we ask them about their borrowing capacity, just over a quarter have found that recent tighter lending criteria were impacting the ability to purchase a property. And again, this was before APRA put their increased buffers there for the bank, so it may get things a little bit more difficult for investors. But difficulty accessing finance was really the biggest concern of the property investors who filled out the survey. And Brett, there's nothing new about that. If the bank would lend you $10 million, you'd go off and buy it. So really, serviceability is important. And as we've often said, property investment is a game of finance with some houses thrown in the middle.
Yeah, absolutely. I hear you say that all the time. And that's all the more to sit down and review portfolios. If you can't borrow, then perhaps the next step's not moving forward. It's taking a step sideways, understanding your existing assets, how they fit into your longer term plan or goal, and then creating a strategy from there.
Well, I always ask in the end of this survey, whose advice do you seek or do you plan to seek for property investment advice? Now, clearly, our team at Metropole, the team you lead, are property investment strategists. What we do is we actually give strategic advice rather than sell property. In fact, we have never sold property. And sometimes the advice, as you said a moment ago, is actually don't do anything. So you've got to be careful whose advice you take because you want to make sure it's unbiased. But 33% of the respondents planned to seek advice from a property strategist or advisor. But I shouldn't find it surprising anymore, Brett. It happens every year. A quarter of them said they weren't going to ask anybody advice for their next purchase.
Yeah, interestingly, each year about a quarter of respondents say they don't want to seek anyone's advice. It's before making the decision. In my mind, this is a major concern because despite the significant amount of research material, information available for free, there's that you just can't beat that on the ground perspective, that local knowledge. One side of the street from the other. I mean, there's a number of suburbs we recommend and we buy in, but in those particular areas, we probably only buy in 30 or 40% of the suburb. We want to rule out certain areas and locations. So it's a bit of a concern that people want to take things into their own hands. And I think as the statistics show, Michael, quite often they probably get it wrong more than they get it right.
I think you're right, Brett. The most expensive advice you can get is cheap or free advice on the internet that's wrong. So over this year, a rising tide lifted, almost every ship. No argument about that. Property values increased around Australia. But moving forward, it's not going to be the same. We've mentioned it in our previous chats that we believe there's going to be a two-tier market where some locations are going to perform strongly because of the demographics in the location, the wealth of the people living there, the gentrifying locations, people who can afford to and are prepared to pay to live in those areas. So even though property values have gone up a lot, there's always rich people who are going to buy those sort of properties. Rich people don't buy secondary properties. But there's going to be a lot of locations in Australia that have gone up over the last year or two that are worth $200,000-$300,000 more, but that person who wants to live there or are currently living in those locations haven't got more money in their pay packet to pay that extra money. So those areas are going to stall now, not grow as much. So you can't just throw a dart at the board and just choose a location where you'd like to live or where you think would be a good place to holiday or vacation. It needs a lot of research behind it. Now, while our readership of Property Updates is reasonably split between males and females, every year we have a much higher percentage of males. Of the 1,706 people who responded, 72% were males. Now, that's interesting, Brett, and you can read into it whatever you want, but Pam, my wife, said it's probably because males are trained to do what they're told. But I'm not too sure about that.
Yeah, she's usually right, Michael.
You're right. So, look, Brett, it's clear that property investor confidence remains strong, and those who can afford to are taking advantage, or they're planning to take advantage of the investment opportunities the housing market's giving us. Many are looking at buying another investment. As we said, about a quarter are looking to buy a new home. But I like the concept that the survey showed that Australian property investors are focused on the long term. This is another theme that comes through in our discussions all the time. While average Australians worried about what they're going to do this weekend, and more inexperienced, naive investors are thinking in the short term, where's the next hotspot, what's going to happen in the next year or two. Strategic investors, they really have more long-term focus. You've got to have at least a 10-year focus. And the multi-millionaire investors that we see at Metropole, they have a multi-decade focus, and they focus on capital growth, Brett, don't they? Not on cash flow.
Yeah, not only that, Michael, but they're also looking to create wealth. They're not just looking to get to a point for themselves to retire and sit on the beach for the rest of it. I mean, you and I know I speak to you on a regular basis, Michael. I know you get a big kick out of looking after the next generation and looking after your grandkids and their school fees. And, I'm in a situation where I'm lucky enough to be focusing on my kids and my family. And I think creating longer-term sustainable wealth is very, very different to just investing.
It is, and therefore you've got to have a good reason why to do it. And that's why I know when you and the team sit down and with potential clients at Metropole, we actually understand what their end game is first. So we don't even start talking about property till we've got a better understanding of where they are, where they want to be, what their timeframes are, what their risk profile is, what hurdles are ahead. Are they going to stop and have a baby, or are they going to move house? Because all that's got to be taken into account. And then I know you and your team build a strategic property plan for them.
Yeah, and I think a lot of people are just guilty about accumulating properties and buying properties and crossing their fingers and hoping it all works out at the end. But I think what we do is actually help give them that roadmap, actually understand what they want to achieve, and allow for these ups and downs and families and hurdles along the way, and show them a way to push through that and stay in the game for the longer term and create that longer term wealth.
Well, I think it starts with sitting down with somebody like you and your team to do a strategic property plan. Have a look at how they're going. How are their investments performing at the moment? Sometimes you've got to fix that before you move to the next level, don't you?
You certainly do. Yeah, absolutely. Particularly with finance. Like if you're getting held back by finance and you've got an asset that's not really doing anything, or it's not likely to do anything in the near future, then you should really consider using that a bit more efficiently and effectively, because it's such an important resource that people obviously overlook.
Well, that's the opportunity cost, isn't it? Because how often do people say to you, Brett, it's not costing me anything to hold this property, it's washing its face?
Yeah, look, and again, doing a simple exercise of adding another 2 or 3% growth on a $500,000 asset over 10 years can show them that it's probably costing them $300,000 or $400,000 and the opportunity to grow their wealth much greater.
Well, I think that's where putting it with numbers and figures and spreadsheets makes it easier. And I know you're a big picture person, but we have a very detailed research team behind us to find the right locations, very detailed strategic planning team to put those plans together. So if you're keen to understand what's possible, what's likely, what's realistic for your future, go to metropole.com.au, find out about what we do. You'll also realise what we don't do. We don't sell property. We have a range of services. Talking about the strategic plan a moment ago, but our buyers agency is probably Australia's leading buyers agency, having been involved in over $4.5 billion worth of property purchases for our clients over the years. We help home buyers, investors, experienced investors, beginning investors. We've got wealth advisory, financial planning, renovations, development, property management, business advisory. And if any of those services would be beneficial to you, we can have a talk about how we can be part of your ongoing journey. And I bet, Brett, you're still keen to have a chat with people if they're interested.
Always. Yeah, I think it's a great time of year to probably reset the goalposts a little bit, heading in towards Christmas, and really start the new year off with a plan and a strategy and the motivation to make it happen.
Well, considering how many people in this survey are planning to upgrade, and whether it's their home or their investment, I think it's a good idea to catch up with our team at Metropole. Go to metropole.com.au. Look forward to catching up with you in another podcast again real soon, Brett.
Thanks again, Michael.
I hope you found it interesting finding out what others think is ahead for our property markets and what their plans are. And if you did get some benefit from listening to today's show, and you know somebody else who would get benefit from it, please tell them about the Michael Yardney podcast. That's the best recommendation I can get if you tell somebody about the show, or you can tell the world about the show by leaving a review wherever you listen to this podcast. I'll be back again real soon. You can catch me in between these twice weekly shows. Just look for me on social media or join our private Facebook group. Go to the Property Update Facebook group, where I leave some comments, some charts, some tips, some information every day. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?